Ladies and gentlemen, good day and welcome to Capacite Infraprojects Ltd Q1 FY2024 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. The presentation which Capacite Infraprojects Ltd has uploaded on the stock exchange and their website, including the discussions during this call, contains or may contain certain forward-looking statements concerning Capacite Infraprojects Ltd business prospects and profitability, which are subject to several risks and uncertainties, and the actual result could materially differ from those in such forward-looking statements. I now hand the conference over to Mr. Rohit Katyal, Executive Director. Thank you, and over to you, sir.
Good morning, everyone. On behalf of Capacite, I welcome everyone to the Q1 FY2024 earnings conference call of the company. Joining me on this call is Mr. Rajesh Das, CFO, Mr. Alok Mehrotra, President Finance, Mr. Nishit Pujari, President Accounts and Direct Taxation, and our IR team. I hope everyone has had an opportunity to look at the results. The presentation and press release have been uploaded on the stock exchanges and on our company's website. The revenue and the resultant profitability was slightly lower as the revenues were linked to cash flow receipts. Cash flow for the quarter 1 stood at 405 crores. However, with sanction of additional working capital non-fund based limits of 150 crores by SBI, an infusion of 96.3 crores of equity, the liquidity position has significantly improved, and the same would get reflected in totality from H2 FY2024. The project ramp-up has gained momentum and will start reflecting strongly in the numbers during second half of the current financial year and onwards. The capital raised in Q2 FY2024 will be strategically utilized to fuel our future growth and fortify our operational capabilities, allowing us to deliver exceptional value to our clients and stakeholders. Other key updates. Projects awarded stood at 1151 crores during Q1 FY2024, of which more than 60% was from existing clients. The company has raised 96.3 crores from esteemed investors. Recoveries of old stuck debtors is on track, and we believe we will be able to recover 35 crores in the current for H1 of the current financial year, thereby strengthening our balance sheet and cash flow position. We expect retention recoveries to the tune of 50 crores in H1 FY2024, which will have a positive impact on our working capital cycle. The order bid pipeline and inquiries remain strong from both private and public sector across segments. We are witnessing overall positive and healthy shift towards quality contracting companies in the building segment. Consolidated performance highlights for Q1 FY2024. Revenue from operations in Q1 FY2024 stood at 430 crores as compared to 477 crores in Q1 FY2023. EBITDA for Q1 FY2024 stood at 76 crores as compared to 101 crores in Q1 FY2023. EBITDA margin for Q1 FY2024 stood at 17.4% as compared to 21% in Q1 FY2023. EBIT for Q1 FY2024 stood at 51 crores at 11.8% as compared to 58 crores in Q1 FY2023, which was 12.2%. PBT for Q1 FY2024 stood at 26 crores as compared to 38 crores in Q1 FY2023. PBT margin for Q1 FY2024 stood at 6% as compared to 8% in Q1 FY2023. PAT for Q1 FY2024 stood at 19 crores as compared to 28 crores in Q1 FY2023. PAT margin for Q1 FY2024 stood at 4.4% as compared to 5.2% in Q1 FY2023. We continue to be focused towards meaningful reduction in working capital cycle during the current financial year at 80 to 85 days in March 24 vis-a-vis 100 days in March 23. Order book on standalone basis stood at 10,245 crores as on March 31st, 2023. Public sector accounts for 63%, while private sector accounts for 37% of the total order book. The gross debt stood at 357 crores, with gross debt to equity at 0.33x. Net debt stood at 191 crores, with net debt to equity at 0.17x. Looking at the growth business opportunities, the promoter and promoter group have offered pledge of 25 lakh shares as collateral security for renewal of company's credit facilities from the banks. We believe that company's interest is of paramount interest. Now the floor is open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Chirag Singhal from First Water Capital. Please go ahead, sir.
Yeah, thanks for the opportunity. Sir, two main questions. First, on the execution side. So, I understand that we had liquidity issues which appear to have resolved to some extent. So, what is the sales guidance for this year? And how do you envision the growth rates for the next fiscal, based on your assessment on the funding limits availability? That is first. And second is on the margins. So we saw that there was some dip in the margins, but I believe that some of it was because of the site establishment expense moving from depreciation to above EBITDA level. So for the full year, how are you seeing the operating EBITDA margin shaping out?
Yeah, thank you. See, first of all, execution, as I just mentioned, for last year also and in the Q1 of the current fiscal also, was linked specifically to inflow of funds from the client. Inflow for the first quarter was 405 crores, and therefore, without availability of any additional working capital limits, the company achieved a figure of 430 crores. We just mentioned that 150 crores of tie-up has happened on the non-fund-based side, of which 50 crores of retention money is expected in H1 of the current fiscal, that means in Q2 of the current fiscal, which will improve the liquidity significantly. Second point is that we have infused through preferential issue 96.3 crores in the company, which takes care of the complete mismatch. Now, any further releases into the system, whether on account of advance, retention, release of old outstandings, which I just mentioned in brief, will add to the liquidity of the company. We see approximately 150 crores further getting added to the long-term working capital of the companies by the actions which the company has promptly initiated. And therefore, the guidance for the full year does not change. We have given a guidance of 2,000 plus escalation on this 2,000 crores of revenue executed. So, it's around 2,100 crores, and there's no reason that we need to change that because the growth from Q3 is given, and we do not see any hiccup which will alter that growth. That's the first part of your question, first question. Secondly, margins. We have been maintaining that quarter-on-quarter margin should not be viewed at. The company has been giving guidance for the whole year, and we have been achieving and maintaining that. And we see no reason why that will be any different in the current fiscal year. So kindly, we request once again that stakeholders, investors should look at the full year guidance rather than quarter-on-quarter basis. Hope to have answered your question.
Yeah, so if you can please reiterate the margin guidance, what should be the range that we should be looking at for the current fiscal?
So we have given a guidance of 17 to 18%. We have so far year on year achieved and improved on that. However, the guidance will remain the same, and hopefully we can give you a positive surprise.
Got it. That's it from my end. Thank you, sir.
Thank you. Our next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Good morning, sir. Thank you for taking my question. So on the first question, is you said 150 crore of overall collections you are expecting this year, and of which 85 crore which you have highlighted, 35 crore through old debtors and 50 crores through retention money in Q2. So this balance recovery in H2, what would be the breakup in terms of old collections and retention, or it would be completely old collections? Yeah.
So the retention stands at 170 crores. We have been able to maintain at that level because of additional guarantees. We believe that 50 crores of retention will be released in the first H1, that means Q2 up to Q2 of current financial year. And another 40 crores will be released in the H2 of the current financial year. All right, so taking the total retention release close to 100 crores. Number one. Number two, of the old outstanding, slow-moving debtors, the company, starting quarter 4 of last fiscal, to date has recovered in excess of 30 crores. We believe that in the remaining period of the current financial year, another 50 to 60 crores will be realized, and that is why while this entirely becomes 210 crores or thereabouts, a conservative figure of 150 crores has been given.
Got it, sir. That's good to hear. And sir, on the execution part, can you throw some light on the SIDCO project and the MADA project? What is the status of SIDCO? How much has been executed in Q1 and the target for this year and the next year under it, monthly or quarterly, for SIDCO and both MADA project? Thank you.
Yeah. So starting with MADA project, we had earlier 8 buildings. Last time we said that we were given scope of additional 6 buildings. Work has started on all the 14 buildings now, and we expect the remaining 17 buildings or 16 buildings to be released in the current fiscal itself. So the revenue at the SPV level, while it is at about 30 crores to 35 crores per month at the moment in time, at the subcontractor level for Capacite, the revenue was 28 crores in Q1 of the current fiscal. We believe that there will be a momentum gain after the monsoons over there, while we are casting the 3 slabs per month on each building. However, the actual momentum will pick up in the quarter 3 of the current fiscal, and we do believe that we will be able to execute close to 40-45 crores per quarter from that project alone. As a standalone subcontractor, not at the SPV level. SPV level will be much higher.
Much higher.
Okay.
Basically, 40-45 crores in Q3, Q4 broadly.
Yeah. So that would add about 90 crores. Okay. And if you see last year, it was hardly any amount. Similarly, in SIDCO, we have billed 104.74 crores in Q1 of the current fiscal. We believe that this figure will be slightly higher in the current quarter, but from quarter 3 onwards, we do believe that this figure will be 60 crores per month, or the running rate will be 180 crores plus per quarter minimum.
Basically, you should be doing almost 500 crore broadly this year from SIDCO.
Easy.
More than that, easily.
Easy.
Okay, sir, I have more questions. I will come back in the queue. Thank you and all the best.
Thank you.
Thank you. Our next question is from the line of Yash Dantewadia from Dante Equity Research. Please go ahead.
Hello, hi. Am I audible?
Yes, please. Go ahead.
Yeah, I just wanted to know if you have plans to dilute any more equity through QIP or any other route, and do we need more funds through this route?
So we have an enabling resolution for 200 crores of QIP.
Yeah.
We are closely monitoring whatever will be in the interest of the company will be done. And as standing true to what we say, when we can offer pledge of 25 lakh shares for renewal of the limits, then you can, gauge the confidence which the promoters have on the company, number one, and the management is ready to what it takes to bring back the company to 600 plus crores of revenue per quarter. So I cannot give you any timeline. However, we have an enabling resolution valid for 1 year, and whatever is best in the interest of the company will be done.
Thank you for answering this. Could you tell me the growth rate for FY25 based on the visibility on the funding limit?
We have told you that the company should grow at least at 25% year on year on the expanded revenue base. So if you're doing 2,100 crores this year, you will grow at 25% minimum the next financial year.
And for this 2,100 crore revenue target or the guidance, whatever you want to call it, that you've given, how much more funding do we really need to execute this project at this pace? Or do we have enough funding to execute the 2,100 crore worth of projects?
We only need bank guarantee limits, and for that, we have received a sanction of 150 crores already. And further sanctions of 300 crores are under process with various banks, namely PNB, SBI, UBI. So we believe that the company will be well equipped within the third quarter of the current financial year for achieving the revenue guidance for FY25.
Okay, thank you. I'll come back in the queue if I have more questions. Thank you for answering my questions.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello.
Yeah, hi.
Yeah, hello, sir. Thank you very much, sir, for the opportunity. First, just a clarification I wanted to understand. When you said the EBITDA margin outlook of 17-18%, does it include other income?
Yes, definitely.
So that is including other income, we are saying. Right?
That other income is hardly any portion. It's not a material or substantial portion that it needs to be looked at. If you want to reduce that and have a view, hardly make any percentage difference.
Oh, fair enough, understood. And so just I wanted to understand, I mean, in the last Concall, we did say that we got some non-fund-based limit of about 100 crores, right? So ideally, I always thought that our execution would not go down as compared to what we did in first quarter of FY23, which was in the range of 477 to 480 crores. Right, because our, non-fund based limit has also increased. So I just wanted to, can you throw some more light, like why we saw, a downward division in our execution in this quarter when our fund based limit has increased?
A very good observation, Deepak. The point is that we had informed that on 4th of March 2023, we had received the sanction from SBI. You see the documentation, consortium, all these things take time. So primarily the release has started happening on CIDCO limits in the first quarter of the current fiscal. And out of that, another 50 crores is being released in the current month and next month for release of the 50 crores retention. So obviously it couldn't have reflected in the revenue growth of the Q1 numbers. What we have maintained in the last earnings conference call and again today, that the company has tied up. The concern was whether tie-up would happen or not. That concern has been addressed, and with an additional infusion of 96.3 crores of equity, the company is well equipped to ensure that the current year's revenue guidance will be achieved.
Correct. But I think in your, opening remarks as well as in your press release, the tone is more towards that the impact of this higher working capital would be seen more in the second half, right? So do you expect your second quarter execution also to be on the muted side?
See, I just tell you, we have lost 15 days in July due to monsoon. Not we, everyone has lost in Mumbai at least. All right. So I do not want to guess too much on the monsoon intensity in August. July has been fair so far, has been kind so far. Generally, you lose in a quarter 15-17 days during the monsoon period because if the work is only being done below the ground level, then there is an issue. Above ground level, there is not an issue if normal monsoons are there. But heavy to very heavy monsoons have been witnessed during July. So therefore, there has been an impact. What we have mentioned in our opening remarks is that you will see a very, very strong growth starting from Q3 onwards, where we do believe that 600 plus is a given.
Okay, understood. Fair enough. Yep, I think
if we are targeting in serious sensibility 430, 420, or let's say 850 crores in the first half year, we are definitely targeting more than 1,300 crores in the second half year. And that is why the revenue guidance. I am being open because a company who stopped for bank guarantee limits and now has started receiving them cannot just grow the next day of receiving the sanction. It takes a quarter to ensure that the revenue comes at its optimum and is visible in the quarter numbers.
Okay, so the mix that you mentioned is first half maybe 800 to 850 crores of execution, and the second half maybe in the range of 1,300 to 1,350 kind of execution.
Absolutely.
Okay. I got it. I think, that's it from my side, sir. All the very best. Thank you so much.
Thank you very much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Vasudev from Nuvama. Please go ahead.
Yeah, thanks.
Hello.
So the line from Mr. Vasudev has dropped. May I request you move to the next participant?
Yeah, please.
Our next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, sir, thanks for the opportunity. Sir, first, if you could help us with, the amount for the unbilled.
Just give me a second, please.
Sure.
The uncertified amount stands at 280.75 crores. For the entire contract asset bifurcation, please send us your email ID. We will mail it to you.
Sure. And sir, secondly, on our fund-based and non-fund-based limits, what is it at currently and how much have we utilized?
The current non-fund-based limits in the consortium, utilization is at about 451 crores. We have an availability of 150 crores or thereabouts for utilization, balance over and above what we have utilized. The LC utilization is at 130 crores, which reflects that the LC utilization over the last 2 years on absolute basis, in spite of increase in revenue, has come down from 190 crores to 130 crores. And the fund-based limit sanctioned is at 165 crores, of which the utilization at the current moment is close to 130 crores.
140 crores?
130 crores. It could be 2 crores here and there.
Sure.
Not on June 30th, current position.
Got it. Sure. So, and secondly, in terms of inflows, are we still on track for that 2,200 odd crores number?
I just mentioned the quarter-wise revenue breakup, what the company is targeting. So for the full year, yes, 2,000 plus escalation, 2,100 to 2,150. It depends on the escalation. You're talking about order book or revenue?
Inflows.
Order inflow target has been given at 2,200 crores to maintain that 3.5 to 4 times the order book of the subsequent guidance. And out of that, we have already booked close to 1,200 crores. So I don't see any challenge given the current strong bid pipeline which is happening. We believe that we should be able to do this and much more, but the guidance will continue at 2,200 crores.
Sure. And sir, can you highlight where we have bidded for which segment or which projects have we bidded for and where bids are yet to open?
We are pre-qualified along with L&T and BG Shirke for Mahapreet data center of 800 crores. We are L1 for Vartaknagar Mada. There has been government change in Maharashtra and there are many things going on, so we are awaiting the work order yet. Apart from that, we expect a repeat order from Raymond very shortly. So these three put together itself will ensure that we surpass the target of the current financial year. Apart from this, we qualify for our RLDA projects, that is Railway Land Development Projects. We qualify for airport projects. And practically most of the housing projects for which the bids are being invited by the central and state government. Apart from this, we are bidding actively for hospital projects for both state and central, and we do believe that for projects of 600 crores or thereabouts, hospital, or up to 800 crores, the company stands qualified on standalone basis.
Got it, sir. Thank you and all the best.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. To ask a question, you may press star and 1. Thank you. Our next question is from the line of Ankita Saxena from ET Now. Please go ahead.
Hello.
Yes, ma'am. Please go ahead.
Yes, I wanted to ask, how are we looking at improving the credit rating from the agencies?
You will see that rating upgrade within this month. Hello.
Hello.
Yes, ma'am. Do you have any other questions?
No, only this question.
Thank you.
So I just answered that you will see the rating upgrade happen within this month.
Thank you, sir. We move to the next question. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Bala Subramanian from Arihant Capital. Please go ahead.
Good morning, sir. Thank you so much for taking my question. Sir, my first question is regarding private and public projects. What would be the margin difference between both?
As explained during the previous Concall, we are only focusing on EPC projects in the government sector, where the margin profile is similar or slightly better than the private sector projects. In private sector, we are doing more of shell and core, like any other construction company. So obviously the EBITDA margins over there will depend on whether we are constructing. There means in private sector will depend on whether we are constructing super high-rise, high-rise, or normal buildings. Generally, as a company philosophy, we only go for high-rises and above. And therefore the EBITDA margins range between 14 to 23% between high-rise and super high-rise. So therefore you see an average EBITDA of 17 to 18%, which also is the guidance.
So what kind of asset turns are expected in this year, FY24?
Please, can you re-ask your question?
Asset turn.
Asset turn. So we believe that our net asset will be in range of 430 to 440 crores. And therefore, we do believe that we have a very good opportunity to be close to 4.7 to 4.9 in the current financial year as asset turns.
Okay, sir. Got it. Thank you so much.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Vasudev from Nuvama. Please go ahead, sir.
Yeah, thank you for the opportunity, sir. So, I just wanted to know what is our capex plans for FY24 and how are we looking at our debt levels by the end of the year?
So the capex plan continue to be pegged at 55 to 60 crores. There is an increase of about 20 crores in view of the new project which we have received in quarter 1. That's number 1. The total addition in the first quarter has been 12.77 crore. So we do believe that from the earlier guidance of 40 crores, the overall capex would be at about 55 to 60 crores. That's number 1. Number 2 was your question on the debt level. So as I speak to you, the debt level in the current quarter has already fallen by about 18 crores. And we do believe that with the repayments of NCDs in the current financial year, where another 2 installments have to be going, the debt reduction will be close to another 40-45 crores. So putting together these two, 20 plus 60, we should be close to about reduction of 80 crores on gross level. Further, the promoters' unsecured loan also will get converted in, warrants will get converted in the current financial year. And therefore, the promoters' debt appearing on the books will also get reduced, converted into equity.
Okay. And sir, second question is that we've seen our private sector share in order book is increasing. So, do we have any comfortable share that we want to target, or we are open to private and the government both at any mix?
Balasubramanianji, the point is that Vasudevji, my point over here is that order book is dynamic. So we are comfortable with 35, 40, 45% of private sector as well. If the client quality is not being compromised, okay? We have seen tough 3 years because of certain clients who are, blue-eyed, suddenly going bad. So we do not want to get into that. Exposure per client will be a criteria as risk mitigation, number one. Number two, government sector is no different. Clients which have their own source of income, or central and state budgetary, sanctioned budgetary support are the projects or the clients we will be looking at. So this 35, 36, 37 is a number. Just because we got a couple of projects in the first quarter from the private sector, it increased, from 33 to 37%. Maybe we receive another 1,000 crores from the government in the quarter 3. And the government share will go up. However, I do believe that we would like to have a robust mix of government and private sector, and that ideally over the next 2 years should be visible at 70-30 or thereabouts.
Okay, that was helpful. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I would now like to hand the conference over to Mr. Rohit Katyal for closing comments.
I would like to thank once again all of you for joining us on this call today. We hope we have been able to answer your queries. Please feel free to reach out to our IR team for any clarifications or feedback. Thank you and see you next quarter.
Thank you. On behalf of Capacite Infraprojects Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.